Good morning. It's Monday, June 9th. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So stock futures are fluctuating on either side of the 6,000 mark as traders are waiting updates on the U.S.-China trade talks. They're going to begin today in London, and the situation is causing a bit of a cautious approach for investors here. So the U.S. benchmark had crossed the 6,000 point on Friday for the first time since February, really fueled by the hopes that they will see a breakthrough in the trade negotiations. You're going to have Commerce Secretary Lutnick, also Scott Bessent. They are going to suggest to President Trump that they consider reversing some of those restrictions on China's tech sector. So we're seeing some of the Wall Street analysts, they're getting really optimistic on U.S. stocks with forecasters like Morgan Stanley, Goldman Sachs, all suggesting that resilient economic growth is going to limit any kind of pullback here into the summer. So if you get the chart back, you look at that gap in the market down at that 5750-ish level where we saw that breakout from that Friday close to the Sunday. That's really your pocket support, your main area of large support, but it's about 250 points lower. So there's quite a few different areas of support between here and that level, but I would call that level as like the ultimate line in the sand here, given where we're at in the market. So Citigroup, they raised their target to 6,300 from 5,800, citing structural bullishness in the U.S. large cap stocks. Deutsche Bank also saying that we saw this full recovery in 2 months, and it's marking it as the shortest vol shock on record. So earnings, there are no earnings coming out here later today. You are going to have Apple Worldwide Developers Conference where they're expected to show a redesign of some of the software, some of the interfaces and the AI strategy. So that's where you're going to get some fluctuations on the NASDAQ and things like that. You do have no conversation between Musk and Donald Trump here over the weekend. So you got Tesla under a little bit of pressure here today. So you also heard President Trump, he criticized Federal Reserve Chairman Jerome Powell, urging the Fed to cut rates by a full percentage point, indicating that he might announce Powell's replacement soon. So I always find that quite comical. So you go to the CME's Fed Watch tool and you start to look at, so the next Fed meeting is in 9 days. Got a 99.9% chance that the Fed leaves rates unchanged. You go to July, about a 16% chance they cut rates. You go out to September, it's about a 65%. You go to October, much greater here, right around 75, 80%. You go to December, and it's about a 100% chance that the Fed will have taken some kind of action here. Now, when they say number of interest rate cuts, a lot of analysts have 3 interest rate cuts, but what they mean is 150 basis points. So they consider every 25 basis point cut being a cut. So if you get 50 basis points, that's 2 cuts in one meeting, is the way that they just look at it here, just for math purposes. So you got gold futures. They are down about $13 here. They fell about 2% over the previous 2 trading sessions. You also have the dollar index under quite a bit of pressure here this morning as well. So all the research notes, I told you, I print off basically everything from like every large financial institution. I get all the research. And what I was looking at here, almost every single one of them was calling for significant declines in the dollar index here. And which is interesting because normally that acts as a tailwind for the gold market. But if you have investors going into other risk assets here, they're looking at U.S. equities, they're looking at Bitcoin. We're seeing other commodities start to push higher and break out to the upside. They may potentially continue to liquidate on that gold market here. And if you look at technically, it is a bit of a failed breakout on the gold market. Yes, it did break out of that bull flag, but however, you're not seeing that continuation that you really want to see higher and higher. And that shows you that that commodity is weakening. And we're even seeing some of the ETF flows. They're starting to get quite stale here, and they're going to go into other ETFs and things like that. So you look at platinum prices, for instance, like platinum up $40. That's about a 3.5% gain overnight, trading at 1,208. So they're up about 30% year to date. The growing interest in platinum jewelry in China and diversified demand is really increasing the prices. Additionally, the trend is showing a significant supply deficit in the market. So platinum is just one of those difficult metals to bring to the table here, to extract out of the ground and bring it up and get it out. And then you all of a sudden get this new demand where they're swapping out gold for platinum because of the price differential. I mean, gold's at $3,300, platinum is at $1,200, so a little bit less than 3 times what the value is. People are really looking at swapping that out, and then that's that structural demand change that outstrips the supply. And many of the mines, they really struggle. They've got rolling blackouts. They've got lack of infrastructure. We've seen unusual activity with regards to earthquakes and other flooded mines and things like that. And that's what's really caused a lift up in some of these other metals here, specifically like one we were looking at on Friday was the copper market, which pulled back significantly. There was a 6.2 magnitude earthquake. A lot of people came in, quickly covered some of their shorts, and then pivoted to the long side, and then we saw no real follow through, so they exited on that trade there on Friday. Now we are seeing Bitcoin futures up about 2.8%. A lot of people that I'm working with closely were adding some Bitcoin on those declines, getting near that critical support level right around the 101,000 mark. Now Bitcoin futures throwing together a few day recovery here. I think a lot of that money rotated out of Bitcoin was chasing that Circle IPO, which was up significantly, using that as some kind of proxy there. Then also you get the spat between Trump and Musk, and people just pared back some of those different correlated investments like Tesla, like Bitcoin, like some of the other cryptocurrencies. They came out of it. Now things die down. Now they rotate back into it. So futures are resuming their rise higher. So you get the dollar index again down just a bit here. All the foreign currencies kind of pushing up. Now the ETF flows are getting interesting because exchange traded funds, they only added about 3,700 ounces of gold holdings on Friday. So that leaves the percentage year-to-date percentage gains for ETF flows on the gold market at 6.7%. You go to silver. Now silver looks really good because it keeps breaking out and it keeps pushing higher on the day. A lot of people were taking some of their silver off. A lot of people were questioning on the options and things like that. But the reality is it's held together. 3 solid green candlesticks to the upside. The question always remains, can silver continue to go up? If you've got gold futures going down, if you got copper futures kind of consolidating here, I think that the silver market is really moving with that platinum market at the moment here. So we'll continue to monitor that development with the silver market. Your major area of support is going to be about halfway through that breakout candle. So I'd call it 35.17, where the market had failed as far as a double top here previously. Now that would become your major level of support. Remember, old resistance, now new support. And then you start to look at the ETF flows. Again, they added 4.51 million ounces of holdings, and that was the 3rd straight day of growth. And it also reflects for 3 straight days of upward price action in the silver market. You got the year-to-date percentage change, 5%. That's the most we've seen all year. And then what happens is the gold-silver ratio, we talked about this so many times, broke below that 97 level, and that was kind of the number that I was watching for a long time. And now it's at about 91-1. So you get to other markets here. One of the markets that don't have a ton of exposure to is that oil market, because we trim positions going into that OPEC plus meeting. Well, now what's happening is OPEC plus, the alliance, they had raised their production quotas. However, the actual output has not significantly increased. And that was Morgan Stanley confirmed that over the weekend here. And they predict that the supply from key OPEC plus members will rise to approximately 420,000 barrels per day in June and September. And it's half of what the increase coming out of Saudi Arabia. So they anticipate that we'll continue to see a surplus here as some of the other outside OPEC plus members are expected to increase their production as well. So we're going to want to keep an eye on that resistance point where we failed there in mid-April. We came up there again in early May, and now we're slightly above it here at the moment. So again, old resistance, new support. So we're kind of coming up there to that level. Otherwise, other markets that a lot of traders have been positioning in is the Russell to the upside. You look at that, it's almost got a perfect inverse head and shoulders pattern with a breakout to the upside. I really believe we could target about 2,200 on the Russell, so about 50 points higher. Another market that we're keeping an eye on are the agricultural markets. You had a nice breakout in the wheat market on Friday, or attempted breakout. It's backing and filling here at the moment. Then you got China's soybean imports. They'd reached an all-time high last month, but they are increasing their purchases from Brazil. So that's what's really driven things up here because of the trade conflict and things that are going on. We could see that some of those negotiations that take place include agricultural products and things like that. And that's where we get some volatility in the grain markets as well. So there's a lot on the table here, a lot of different markets. Even sugar is slightly higher here today, natural gas slightly lower. But I think that there's a lot of good developments going on in a few different outside commodity markets here and some good trading ranges in other commodities as well. So if you guys got any questions, shoot an email, info@bluelinefutures.com. It's going to be a lighter week as far as economic data coming out. We really don't get anything until Wednesday. We'll get the CPI. Thursday, we get the PPI, the jobless claims. Friday, we get University of Michigan sentiment. And then someone asked me about the commitment of traders and things like that. And what I generally do when I look at commitment of traders is I'll look at the extremes more than anything. I just want to see, is there anything really standing out? Because I'm not really going to analyze too much of this data because the data really lags. And you go to the silver market, you look at the commercials. The largest record short was back in 2017 at minus 118,000, and the commercials are short about 77,000 contracts. Those commercials, they'll use a lot of banks and financial institutions and keep increasing those shorts here as hedges go into place. You look at the long side for the non-commercials, and it's just really in the middle of the range here with no significance whatsoever. The one that really stands out, again, is the feeder cattle, where you get these record shorts and things like that. And that's where I start to look at those markets on extremes for like wheat, on feeder cattle. We'll see where sugar and things like that all stand out at. So again, you got any questions, shoot an email, info@bluelinefutures.com. Remember, futures and option trading, it does involve risk of loss. It may not be suitable to all investors. Good luck, good trading.